Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Today's episode, I want to talk about what is potentially next for Tesla, mainly for Tesla stock. I had a conversation with my father today. He called me asking if there's any new announcements going to come up or anything that would essentially send the stock to move higher. So today's episode, I want to talk about that. And I also want to talk about this investor grade rating increase. Will or won't it happen today with Tesla? So we're going to talk about Tesla stock today. We don't have too much to cover because there hasn't been a lot of news right now in the world of Tesla or the macros. So we're going to cover it. We'll try to keep this short and concise. But before we get into it, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. All right, first things first, I hope everybody has a good weekend. I hope you enjoy your weekend that's about to come up. For a lot of you, it's probably a long weekend, so make sure you cherish it and enjoy the time with your family, and don't worry too much about the stock market or Tesla. Although if you're like me, you can say these things, but it's kind of hard not to focus on it because, it's just part of our day-to-day lives and it's fun. So with that said, let's talk about this conversation I had with my father. So my father called me literally about a couple hours ago, or I guess I called him back, and he was asking what's going on with Tesla. Is there anything that he should know about? Anything that might be coming up? Any news? Anything that can essentially get the stock to move in the right direction? He went ahead and bought more shares recently. So, he was just trying to pick my brain about what I think is happening. So what I think is happening right now, and if you guys were on Yashu's live stream about an hour ago, you would have seen that I talked about this within the chat, and Yashu brought it up. But I think we're coiling right now. I think Tesla is going through Tesla share stock price and the stock side of Tesla, not the company itself. I think the company and the stock are two different things. So the stock itself, I think it's coiling right now. What do I mean by that? What I mean is we're essentially sitting between these ranges, right? We're just bouncing back and forth, back and forth. And the longer that we coil for, the bigger the breakout will be in either direction, up or down. But it's of my opinion that right now we are coiling, waiting for a big move up. And that's one of the reasons why you guys keep seeing me, whether it's on Twitter or on here, where I keep talking about how, I just bought some more Tesla. Well, I bought more shares and I bought more shares, and I just keep buying. Every chance I get, I buy more and more. Now, the reason for this is because I think we're coiling. I think we are essentially we're like a spring, just ready to be released. We have all of this potential energy that we're just building up, waiting for it to release. And so where am I coming from with this? Because I don't really like to look at stocks or stock charts and try to make predictions based on what's happening there. Obviously, you guys have seen me do it here and there, but that's just because it's fun. It's just, a good representation of where things currently are. But as far as the fundamental analysis of Tesla, I think we're coiling. So let me give you an example. So we came into 2022 with a record number of vehicles delivered, right? So Q4 was just an amazing quarter. Q3, we had another amazing quarter. Now, Q2, yes, we got suppressed by all the lockdowns, zero COVID in Giga Shanghai, but you had to take that with a healthy dose of understanding about what was going on in the world. That wasn't a Tesla limitation or issue. That was a China forced these lockdowns upon Tesla, and they had to deal with it. Then we had Berlin, we had Austin open up, and we really didn't see any reaction from the stock price with regards to that. We've seen FSD roll out more and more and get better and better, and we haven't really seen any stock reaction to that. We see that right now Tesla is essentially at the biggest run rate they've ever been with production and delivery of vehicles. We haven't seen any reaction from the stock when it comes to that. We have seen Elon and team just get more and more bullish with everything from battery supplies to demand to talk about robo-taxis to releasing the semi to the Cybertruck. I mean, you could go on and on. It doesn't stop. We've had AI Day conversations, AI Day Part 2, the humanoid. We've talked about potentially investor grade rating increase. We've talked about Q3 and Q4 number. I mean, just like you can just go on and on. It doesn't stop. All right. FSD beta going wide release by the end of this year. the amazing 69.1 videos that we're watching and witnessing, everything. There's just so much good news and so many things that are happening or have happened, again, like Berlin, Austin opening up, that we haven't actually seen any of that reflected in the stock price. Now, there is another way you can look at it where you can say, hey, well, it actually has been recognized in the stock price, because if not, we could be a lot lower. But I lean more towards the side of, well, macro's been fighting us every step of the way. Okay, so while I think we're coiling right now, I don't think we can relinquish the coil to the upside, hopefully to the upside, until we get a handle on the macros. The macros are really what's dictating everything. Either that or something just out of left field happening and we just, we didn't see something coming. So, for example, a robotaxi unveil could do that. Actual release wide of FSD beta could happen. A better update on Optimus than what any of us were expecting, that could do it. You never know what could do it, but odds are it's going to lead with the macros. So let's talk about the macros. Right now, I think the whole market is in a stalemate. The whole market is essentially hanging out, chilling out until we get through September CPI numbers, with essentially consumer price index. So essentially a measurement for inflation, or at least one of the measurements that people tend to look at when they want to decide where inflation is. But then also what the Fed decides to do. Will they do a 75 basis point rate hike move or a 50? 75 indicates they're a lot more hawkish than we anticipated. And Jerome Powell seems like he wants to deliver a certain message, as he did during his meeting at Jackson Hole. However, he might do a 50 basis point. I sort of am in the camp of Jerome Powell was trying to say what he had to say just to keep the market from getting ahead of itself, right? The market was starting to predict that in 2023 rates would get cut and that inflation is going to come down quickly. And the market's a future indicator of what's to happen. And so the market was essentially reacting to that. And it seemed like Jerome Powell wanted to get in and wanted to say, nope, let me shut this down right now, because and this is a hypothesis of mine, I think Jerome Powell, Fed Chairman Jerome Powell, I think that he believes that things are going the right way, but he is scared. He's terrified that we might celebrate and let off the accelerator before things actually start to turn around. So I think he is trying to double down, at least in his rhetoric, to make sure that we do not let up, or people don't just go out and start spending again like it's 2020, right? So I kind of think there's a little bit of a game going on there. I don't know if you guys could hear that, but it's thundering outside. I do live in the lightning capital of the world. Anyways, so I think in the coming weeks, we could see the beginning of this relinquishing of this coil that I think is happening. And it could either be good CPI results, which shows that inflation is continuing to decline. It could be Jerome Powell on the back of that only doing a 50 basis point rate hike. It could be just the fact that we start seeing a slowdown in the economy, which kind of sucks because it means that bad news is good news and good news is bad news, right? So it could be all of this. Or it could go the other way around, where we actually don't see a meaningful decline in CPI, and then Jerome Powell has to do a 75 basis rate hike. But I don't really see that being the path. If anything, I see inflation coming down more. Maybe the Fed does a 75 basis rate hike, and we'll see where we go from there. But in my opinion, I hate to say this, I'm in the camp of Jim Cramer. I would rather them just go ahead, raise rates really quickly, get to where we need to get to, and let's just get past this, right? Why are we going to keep sitting here and just slowly dragging out the pain of these rate hikes? Let's just get where you think we need to get to, and let's get over with. Let's rip that Band-Aid off, all right? It makes no sense otherwise. Now, when it comes to inflation, there's not much we can do, all right? The big part of inflation has to do with oil. And now Russia, Europe, NATO, G7, I mean, there's all of this posturing about, okay, we're not going to sell anything to countries that want to cap our prices. At the same time, we're not going to buy oil from Russia because of the invasion of Ukraine, right? We just see all of this just posturing. Everybody's making all these decisions, and we already have a very tight energy market supply chain. So there's not a lot of wiggle room in there. So we'll have to keep a close eye on that. But when it comes to energy prices, no matter what the Fed does with rate hikes, there's nothing they can do to impact it. So, I think the Fed understands this, that there's a certain point where they're not going to be able to do anything. Same with the China lockdowns, okay? Right? We're seeing now even more lockdowns, more zero COVID lockdowns going on. I think, I forget the name of the city, but Intel is based out of there. Apple makes their phones out of there. And they have about 20 something million people that they have in quarantine or in lockdown. To put that in perspective, I think New York City only has about 6 to 9 million people. And we're talking about a city that's 20 something million people in lockdown. All right. So these numbers are huge. They're drastic. This isn't small potatoes. But even with something like that, you take the ship that went sideways or ran aground in the Suez Canal, which is a big choke point for the world. You had that, and then you add in Russia is going to cut oil supplies off, or G7 is not going to buy Russian oil. I mean, no matter how you slice it, all of these things, there's nothing that the Fed could do to prevent this from having impacts on inflation. And don't kid yourself. Even if you have an electric vehicle, these oil prices going up will affect you, because everything you get, your electric vehicles are delivered. Guess what? They're transported on ro-ros. These ro-ros, they use marine diesel oil to transport them, right? That's oil, that's fuel, right? And all has to get refined. Everything you do, from your Amazon stuff that you order and that gets shipped to you, to the windows that you have in your house, to, just literally everything, there's some type of petro involved in the process. So one way or another, those costs will get passed on to the everyday consumer. So there's nothing we can really do about that. There's nothing the Fed can do about that. The best thing we can do is either increase oil supply and do more exploration, as Elon indicated in one of his recent interviews, or we can just get to peace in the world. And sadly, that doesn't seem to be the easier of the two options for some reason. So anyways, I'm not trying to make this be a negative video. I just want to kind of set the stage for where I think things are going. Now, I'm optimist. I like to think I'm a realist as well, but I still hold that I think we'll be at a $1,200 stock price by the end of the year. This is pre-split, obviously. So you take that 1,200 divided by 3. So, about a $400 stock price. Yeah, that's good math. A $400 stock price by the end of the year. And why do I think that? Well, I think we're going to see a run up. I do think that we'll start to see more and more that inflation's cooling off. I think this whole fear about oil prices going up through the roof might be a little overblown. I think we're going to start really seeing meaningful decline in oil prices. We'll see meaningful decline in inflation. And then I think Tesla is going to start gaining respect. I think a lot of people are going to start falling into Tesla, especially as the year comes to a wind. And as we get Q3 results, Q4 results, whatever happens with AI Day, right? A new factory announcement. There's just so much in the next few months. And as the year, gets closer and closer to ending, that coil is getting tighter and tighter and ready to explode. All right, I want to talk about one more thing. So if you guys have been aware, let me see if I can share my screen real quick. Okay, so you should be able to see my screen now. So here you can see Alexandra Mers, otherwise known as Tesla Boomer Mama. If you don't know who she is, then you are a little disassociated from the Tesla world right now. But she has a background when it comes to these credit rating agencies like Moody's or S&P. And anyways, she got a letter back. You can see here, kudos to Moody's for answering my email as to the content. Help me please with ideas how to answer to Renee. So you can read it here if you want. Check it out. Check out her handle. She also comes up here and says a thank you to Dave Lee for a video that he recently made. And I highly recommend you check that video out as well. But the gist of what Moody's got back to Alexandra about with regards to these ratings is that it has nothing to do at this point with Tesla's finances or revenue or margins or anything of that nature. Right? It doesn't have to do with the amount of debt they have. It doesn't have to do with the amount of operating income they have. What they're saying now is that the reason that they're not giving them a investor grade rating is because they do not have enough vehicles for their portfolio. They have too few models in their portfolio, and all these other automakers are out there coming out with all these other vehicles, and this is why Tesla's not going to get their investment grade rating right now, investor grade rating. This is mind boggling. All right, I'm not going to put this as eloquent as Dave Lee does in his videos, but I'll tell you right now, this is just bull. All right, this is just idiotic. This is stupid. This is complete corruption. All right, this is the height of corruption for a rating agency. Rating agencies, nonetheless, that created and failed, or either created or failed to see the obvious issues with all the credit default swaps and everything that happened in 2008. For them to sit there and think that they have any kind of authority or ownership or ability to tell a company what products or how much variety of a product they need to have in order to be investment grade rating, that is ridiculous. All right, there should literally be an investigation into this. This is not okay. There's so much wrong with this. And to show you how stupid and ignorant this is, just look at Apple. Apple has one phone. They have different variations of it, just like Tesla has different variations of their vehicles, but they have one phone. They have two computers, really, two laptops. They essentially have the Air and they have the MacBook Pro. Yes, you can get the M1 chip, you can get the M1 Pro chip, you can get the M2 chip. Yeah, you can mix it up. You can do the same thing with Tesla. You can get performance, you can get long range, you can get dual motor, right? I mean, you have your options. But the point is, when Steve Jobs came back, when Steve Jobs came back to Apple, he essentially eliminated everything and reduced all of the different products they had and really slimmed down, right? The whole point was to be very good in a couple of segments and to dominate those segments. And that's what Tesla's doing. That's what Elon's doing. With the 3, they dominate that segment. With the Y, they dominate that segment. With the S, they dominate that segment. X, if they could build them fast enough, they'd be dominating that segment. Cybertruck, they will dominate that segment. They've got more reservations than what Ford even has with the Lightning or F-150 combined. All right, so this is crazy. To not give them investor grade rating just because where they stand with the amount of models they have, that's crazy. And not to mention, the reason they haven't even released another model is because they can't fill the demand of what they currently have. This whole notion of the $25,000 vehicle, guess why it hasn't come out yet? Because they can't even keep up with the 3 and Y. So why would they ever introduce another vehicle model? This is insane. Okay, yeah, so you're telling me that if Tesla said, okay, we're going to introduce another model that's going to make us less money because it's going to be at a different price range, now you give me investment grade rating versus me sticking with the vehicles that have higher gross margins, that bring in more revenue, that I can't even keep up with? Like, this makes no sense. This is the same notion we heard during the Q4 earnings call, where everybody was asking for the $25,000 vehicle, when it was going to come out, when it be made. And Elon's just sitting there like, guys, you're being idiots, all right? Like, wake up, open your eyes. You're complaining that we're not coming out with a cheaper model that would have less margins, yet you don't seem to understand we can't even keep up with the vehicles we're making that give us 30+% gross margins. Think about it. This isn't rocket science. This is basic math. This is 1 + 1 = 2. And you're asking them to do 1 + 1 = -1.5. That's what you're asking for. Makes no sense. Anyways, this is why I hate some of this stuff. Is because it's literally just a manipulation and corruption. You know, I think you're seeing a lot of people talk about it, about YouTube right now. It seems like YouTube is I don't want to say this. I don't have any actual facts for this, but there is some ways we can kind of see our numbers with YouTube channels and different episodes we are releasing. It definitely seems like there's been a attempt to throttle the amount of views and people going towards anything related to Tesla. Like, it seems like there's something happening there. And that's not just me saying this. I noticed this quietly. I would never say anything, but I'm seeing more and more YouTubers talk about this. And it is interesting to see the amount of throttling that's going on. And, you know, then you throw in the whole Dan O'Dow, Omar's thing, where Omar made a video essentially disproving everything to do with the Dan O'Dow tests about, you know, the vehicle hitting kids or whatever. And somehow Google takes that down. And why is there a conflict of interest there? Well, one, because that wasn't unsafe, but two, because Google owns Waymo. Right. So there's just so much going on. All this corruption. It's so annoying. It's honestly why I think a lot of us support Elon and Tesla and SpaceX so much, is because it seems like there's never corruption with them. It seems like they're above the corruption, they're above the fray, right? They just do the right things when they can, right? They try to be less wrong, and I think that's the ethos of the companies, of investors who are trying to invest to better their families and better the world. So all we're trying to do is be less wrong with our investments, with the company, with all of our decisions. I don't care who's right. I don't, from a political perspective, left or right, from a engineering perspective, from a philosophical perspective, from an investment perspective, I don't care who's right. I want the right answer. That's all I care about. And for me, I happen to believe it's Tesla. And yeah, so I just want to be less wrong. And hopefully these other companies like Google, if they are doing anything nefarious, which I have no proof of, it's just, it seems this way. Moody's, S&P, it's definitely nefarious. They are not being less wrong. And in general, the whole treatment of Tesla and Elon Musk, especially because they don't lobby, they don't spend money on these different campaigns. I don't know. I'm going to stop ranting here now. But I hope you guys took something away from this. I hope you guys are also as excited about, the remainder of the year as I am. I stand committed to my thoughts about $400 stock price or $1,200 pre-split. I really think that we're coiling right now. I do think that we're going to move up meaningfully higher. I think we just got to get past some of this Fed macro environment that we're going to see going into September. So we'll see what happens from there. But I am definitely ready to buy more every chance I can get. And I'm, telling anybody who listens to me and asks me what I'm doing, that's what I'm doing. None of this financial advice, but these are the things that I'm doing. All right, we're going to leave it there. I hope you guys enjoy your weekend. I'm thinking I might be filming a live stream sometime this weekend. So let me know if you guys are up for a live stream. Maybe I'll do one Monday. Maybe I'll do one Sunday. Yeah, let's do one Monday. Maybe we'll do one Monday. So keep an eye out for that. We're going to leave it there. Do me a favor. Hit the like button. Hit the subscribe button. Ring that bell. I love you all. Peace.